This week on the Trading Bell, we're talking matters home ownership, and we'll be speaking to the Managing Director of the Kenya Mortgage Refinance Company, KMRC, Mr. Johnstone Oltetia. We'll be discussing matters dealing with the bond market. Why is it affordable to own a home in Kenya? And a lot much more. But we'll be getting to that shortly. Hello. But first, let's take a look at his profile.
Mr. Johnstone Oltetia is the Chief Executive Officer and Managing Director at the Kenya Mortgage Refinance Company, responsible for the establishment and operationalization of the company. From 2017 to 2019, Mr. Oltetia held the position of Senior Financial Sector Advisor at the National Treasury of Kenya, responsible for policy matters relating to banking, microfinance, capital markets, pensions and insurance, among others. Prior to this, Mr. Oltetia was the Manager Market Supervision at the Capital Markets Authority Kenya, responsible for oversight of listed companies, securities exchanges, central security depositories, asset management companies, investment banks, stockbrokers and investment advisors, among others. He is a certified investment and financial analyst and holder of MBA and BCom degrees, and also a member of the Institute of Certified Investment and Financial Analysts (ICIFA) and Institute of Directors of Kenya. Mr. Oltetia is an alumnus of the Harvard Kennedy School, holding a certificate in innovating public policy and service.
Thank you, Bwana Johnstone Oltetia, for joining us on the Trading Bell. Your preamble to welcome to the show. Of course, a great start to the year. And just to get your opening remarks, many Kenyans have been keenly monitoring the issue around the affordable housing. And you are literally at the center, at the heart of this. Just walk us through, what does KMRC do and how can Kenyans work more closely with you?
The Kenya Mortgage Refinance Company is financial. It provides long-term funding to the primary mortgage lenders for purposes of lending to wananchi in order to create or make it accessible and affordable to get mortgages. Now, a majority of us, of course, understand KMRC as a non-deposit taking financial institution. So essentially, it's a wholesale provider of financing. And it does this through the financial institutions. The financial institution we have here are primary mortgage lenders. So, and the primary mortgage lenders are naturally institutions that normally provide mortgages as part of their business offering. And that's why we call them primary mortgage lenders, because they originate the mortgages directly from the wananchi. And now, for that purpose, when they do the origination of what they call the underwriting, they submit a portfolio of mortgages to KMRC. It's that portfolio that KMRC refinances. So you see, they do the origination process. They get into contact with the customers directly, and then they pay for those mortgages. And thereafter, they seek money from KMRC in the form of a refinancing, or what you can call a reimbursement of what they have, and then they use that money to originate new mortgages. Now, the whole purpose is to create affordability, and that's why we are calling it affordable housing. For the longest time in our market, we have mortgages, but when you look at the mortgages that have been there until when KMRC came in last year, they have been all earmarked for the upper market segment in our country, and therefore a majority of the people cannot access decent housing. And decent housing here means an affordable house that is equally as decent as any other. And that's what KMRC is pushing. Now, we have some successes already on that, and we're very glad because since KMRC came to the market, we have provided funding to a number of primary mortgage lenders, to be precise, 10 so far, and extended about 1.3 billion shillings already, which is money which has left KMRC. And we have a pipeline of another 9 billion that we are working on with the primary mortgage lenders that we are going to push out very shortly. That has helped to reduce the rate at which we are offering mortgages. So essentially, when you look at it carefully, KMRC is helping to reduce the rate at which customers can access funding, because a loan of 9% has never been available in our market, other than potentially those that are funded by institutions.
All right. Very interesting insights that you shared there, Mr. Oltetia. And just to pick it up, majority of Kenyans, of course, also, as they desire to own homes, we do understand that the cost of mortgages has been one of the major barriers. And you've already preempted my next question. Of course, you are in the business of trying to make these loans more affordable. But from where we sit, we're looking at mortgages in the country, not more than 20,000 mortgages. This is according to the latest CBK data. And we're looking at an annual housing demand of over 500,000 units. Are we able to meet this growing appetite for home ownership? And as an organization, I know you're not literally at the stage at which you are building, but you're in the value chain. Perhaps walk us through, how do you intend to raise more funding, especially now that you're seeing the affordable housing pillar is gaining momentum. A number of projects have been launched in Mavoko, we've seen Pangani, we've seen Ngara, and a lot more in the pipeline across different counties. How is KMRC positioning itself towards tapping into this huge scope of funding that has for many years remained underserved?
Thank you. So when you look at, you're very right. So when you look at the question around the deficit of housing we have in our country, it's actually a very interesting one, because the deficit we have is about 2 million units, according to the last statistics we got of 2019. Mm-hmm. And that increases by more than 200,000 units every year. Mm-hmm. Now, we understand that we only have about 50,000 units every year that come to the market. Mm-hmm. But when you look at those, only about 2% is available for the lower middle income, or the moderate to low income.
Yeah.
That means it's the area that is completely underserved. Mm-hmm. Now, the upper income is obviously being served for obvious reasons. They can afford, and therefore there's a lot of housing supply on that side. But the most important thing is, how do we enable a majority of the Kenyans who are in the moderate to low income to access homes, and decent homes for that matter? And I think one of the key issues why KMRC was formed, which is certainly, it's government took part in that, and government deliberately decided that KMRC should be driven primarily by the private sector. Mm-hmm. And the idea was to crowd in private sector funding to support affordable housing. Now, the way KMRC is approaching this, so we have two levels. Number one, we have demand side of housing, and we have the supply side of housing. Yeah. Now, KMRC is participating more strongly on the demand side of housing. The demand side of housing is providing funding, or providing long-term funding for that matter. The supply is about development of those units. Mm-hmm. That are needed, that meet the eligibility criteria. So when you look at the demand, you start then looking carefully at how is KMRC funded to be able then to provide or meet its objectives. Mm-hmm. And so KMRC funding is split into two. So we have equity and we have debt financing. So because KMRC is not a state corporation, yes, it is funded mainly through shareholder funds, which is the equity we are talking about, mm-hmm, and loans, which is the debt that we are also talking about. Now, so equity certainly is money we raised. I think you already know that. Sure. We have about 23 shareholders. Government, mm-hmm, is one of them, mm-hmm, and the difference 22 private sector, including the IFC, mm-hmm, Shelter, and strong banks like KCB, mm-hmm, Coop Bank, and HF, and the rest. Mm-hmm. Now, and then we have debt. So the kind of debt financing we have currently, which is also split into two, we have debt financing through the National Treasury, which is sovereign debt. So that sovereign debt is what we are accessing currently from the World Bank and the African Development Bank. And that money is very concessional. Mm-hmm. So it's extended to KMRC for purposes of refinancing those to create that affordability. Now, so that's the money we've been pushing through, and that's about 30 billion shillings, 20 billion in terms of the line of credit from the World Bank, and another 10 billion from the African Development Bank.
Yes.
Now, so you see that is, that's how KMRC started.
Yeah.
But for purposes of sustainability of KMRC, we had to look for additional financing to blend these resources that we have. And the way we are doing this is accessing capital markets funding, and that is by issuing of bonds. So as a corporate bond issuer, KMRC is currently in the market to issue a bond. For the time being, it's a plain vanilla bond. And that is part of the resources that we're going to use to refinance the mortgages. Now, so the way we do this is that we access the more expensive capital markets funding. But the reason why we are doing that is because concessional resources will run out at some stage, but you need a sustainable institution over time. And the way that we want to sustain that fundraising part of KMRC is to create a track record in the capital markets. And then it will be a regular issuer, attracting investors to come in and put in resources, and therefore we use that to refinance over time. But before we exhaust the concessional resources, we are going to blend the capital markets resources we're accessing with the concessional resources we have, and that reduces the rate at which we are going to lend, because of course capital markets funding is more expensive. We have the concessional resources, and the weighted average cost of funds when you blend the two will be lower. And that's part of KMRC creating that affordability over time. So, going into the bond is right in the market now, and we expect it to close before 20th of February. And that means we want to raise that money as quickly as possible so that we can extend to the mortgage. Now, we essentially align the resources that we raise with a pipeline of mortgages that we get from the financial institutions. So we already have a pipeline of the mortgages that we're going to refinance, and therefore we raise funding. We know that, or we have very clear visibility of where the money will go. Immediately we raise it.
All right.
So the funding of that, so you can see the funding of KMRC is equity, debt, and the debt is split into capital markets debt and concessional financing, which is currently in form of sovereign.
All right. Mr. Oltetia, many would argue that you are going ahead of yourselves by floating a bond. Perhaps what would be your message to the market, especially now that we're seeing we're also heading into another election cycle, and of course the economy is usually interlinked with politics. Perhaps the timing of the bond, are you confident it will attract positive sentiment across the market? At the same time, what are your projections in terms of what you look to raise from this bond issuance?
Thank you, and that's a very good question. So timing is very key. Going to capital markets, timing is always the most important thing. So you recall that we started making announcement about KMRC going to the market last year. And that was sometimes in March. It's actually in our strategy to issue a bond. So we went to the market straight from March last year, getting the transaction advisors, etc. Now, in the course, we wanted to issue the bond last year, and in the process, two corporates came to the market ahead of us. That is East African Breweries and Family Bank. Now, we didn't want to come to the market all at the same time. So we had to obviously carefully look at what is the appropriate timing for us. And the other thing, of course, we had to consider was the approvals that we had to seek from the regulators. Now, we only got the approvals this year. And that means that we had to issue the bond within the year. But this is the most appropriate time. So I think at the moment, it's only KMRC which is in the market. We expect a massive oversubscription, and the reason why we believe this way is because KMRC is this massive small institution. So it has a very good credit, it has a very strong balance sheet, It has a very strong governance framework. It's certainly supported by strong institutions, not least government. We have the World Bank, African Development Bank, IFC. So we have local institutions. The largest banks we have in this country are part of this question. And then we have a number of SACCOs, which are also the largest SACCOs we have in this country. So they are all backing up this institution for a reason, because they know that KMRC certainly has a very huge impact that it creates in our market. We expect the market to scale up over time, and a lot more housing units that are affordable will come into the market, and then we see a bigger pipeline from the financial institutions, and then we go to the market maybe next year to issue a 4.5 billion or something like plus that next year. And then the last of the tranches will be issued maybe in 2024, and it will obviously be the difference.
All right. And of course, looking at the big picture, I just want to get your overall assessment in terms of mortgage uptake. Are you seeing an improvement? And at the same time, by all this falling in place, how will it position our mortgage market, especially knowing very well that also the formal population of people who are in salaried jobs and the vis-a-vis those who are in the informal sector but are also earning salaries in the name of wages. There's a big gap, especially in the low end. When you look at even the developers, like you did allude to earlier, that there seems to be, we need a paradigm shift, because when you look at developers who are doing low end, their units are moving much faster compared to the ones doing high end. But from your vantage point and your interactions with data and of course market players, how does the mortgage outlook look like for Kenya? At the same time, how can we make housing, home ownership much cheaper?
Thank you. So we are going to shift that, and that is exactly why we are talking about creating a more significant impact in the lower part of the market. And that's where the market is. Actually, for anyone who is considering housing right now, the market is not on the upper part as it has been, but now on the lower end. And that's why you're talking about units that are being developed at the low end are going faster. And they will certainly even go faster as we scale up the developments. Now, so at the moment, you realize that before KMRC came in, of course, it's been a challenge accessing home ownership. That will no longer be a problem because that has since been solved. Now, the challenge we're still facing is on the supply, which is the developments of those units. And development doesn't move as fast. And then with the affordability that's already there, with the extension of the repayment timelines, from an average of 8 years, because I think based on the statistic from the Central Bank for 2019, it's been about 8 to 11 years maximum. But the biggest impact of that, in fact, is actually funded mortgages. Funded mortgages is where an institution places a deposit with a financial institution, like say KMRC places a deposit with HF or KCB, and advise KCB you have an arrangement for the staff to benefit from there. And that's what has been driving more significantly the mortgage uptake, because institutions fund them. But how many people can access that? Unless you work there and that institution has a mortgage program, you will not be able to access. But now we want a more broader wananchi access to housing. And that's why we are lengthening the tenor and we are pushing financing down market by reducing the costs of funding. And that way, we'll be able to enable a lot more people to be able to get housing. Now, more significantly though, the presence and availability of mortgages is going to be scaled up essentially because of the presence of SACCOs as mortgage providers. That has not been available in our market in Kenya. Now, it's the very first time that we now have 11 SACCOs who are participating under KMRC and who we have supported to develop capacity, develop origination arrangements, underwriting criteria and things like that through what we call technical assistance, consultancies that have helped them, and who currently have received approvals from their regulator, which is SASRA, to be able to provide mortgages. Now, the reach increases because SACCOs cover widely around the country. So we expect, because of the presence of SACCOs, a wider reach, across the country for anyone who needs a mortgage to be able to get.
All right. And as we wrap it up, Mr. Oltetia, it would be unfair for me not to ask you a question that has been in the minds of many Kenyans, and this is on the 40% access of pension for people to fund mortgages. Some say it is impractical, others are terming it not a well thought through policy. From your assessment, what was the original concept, and is it something that will work, especially looking at the demography of our civil servants and their ages in fitting into this program?
So you see, the policy shift was really well thought out. The policy shift to be able to enable pensioners, or not necessarily pensioners, because that's a different definition when it comes to retirement benefits.
Yeah.
But if you have a pension, the ability for you to access part of your pension now, and that's what they're calling 40%, or 7 million. So the issue is 40% of your pension or 7 million, the lower of that. That's the shift that was provided in that policy paper. It's so important. And the reason why it's important is because you need a house now as opposed to later, right? You need a house right now, as opposed to waiting to retire so that you can go and build a house. And that's exactly why that was shifted that way, because of the reason that as you continue to accumulate your pension, you need security. And part of that security is that home. So in my view, or at least in our view at KMRC, we believe that it's going to work. And the reason why it's going to work is that financial institutions will now be able to develop products that target that demographic. Now, pensions are not just by government, so it's not only on civil servants. So we have already had conversations with a number of pension institutions or fund managers that are managing pensions, and they're already making arrangements with a number of financial institutions for purposes of enabling their members to be able to access. There's actually a lot of interest by people who have pensions to be able to do that. Mainly those guys who are in private companies or public financial institutions, and they're making pension contributions that will essentially support them to be able to get homes. So that's also a game changer because of what it brings to the market, an additional equity class that will be able to get for you to be able to access that mortgage. Essentially, when you look at the people who are in the lower income, and assuming that based on the kind of pension they get right now, they can only access $1 million, $2 million, 1.5 million.
Yeah.
That will all go into a deposit, and that reduces the cost that you're going to incur to repay. Because if your house is 3 million, you pay up 1 million, you only repay 2 million through a mortgage. And that means you are now more qualified, or now you can even be able to repay, because the other factor that will determine whether or not you qualify is your ability to repay the loan. And if you pay without an obligation to repay the 2 million or whatever amount that you have in your pension, then the obligation to repay is only based on the difference. And that essentially makes a lot more people to qualify to be able to get homes.
Oh, thank you for that clarification. And that brings us to the end of our interview today.
Thank you.
Quite an honor to speak with you. And indeed, Johnstone Oltetia, the Managing Director for KMRC, a man on a mission set to redefine the home ownership agenda in the country. He believes that the mortgage matrix is going to work and pay off in the long term. And we'll be keeping a close eye just to see how things pan out in the coming days and months. Well, this has been the Trading Bell coming to you from Upper Hill. On behalf of the entire team, it is bye-bye for now. Keep it locked on KTN.